Hi there, it's Ryan G. Wright with DoHardMoney.com. Super excited to be with you today. We're going to talk about why are hard money loan rates so high. So when you're driving down the freeway and you see a billboard that says interest rates are 3.5% or whatever the case is, and then you call your hard money lender and they say rates are 12% or 15% or maybe even 18%, and you say, wait a minute, why are interest rates so high when it comes to hard money? And it's quite simply a few reasons. First and foremost, the money for hard money loans doesn't come from government backing. So when a bank ends up giving a loan, they get interest rates from the government at certain prices. So they're actually able to recapitalize their money by selling those securities. And lots of times those securities are sold Fannie Mae, Freddie Mac, or FHA is the one that's actually doing the loan. And that money and that interest rate is typically the borrowing at very little right now, to almost towards nothing is what they're borrowing for. So if they're borrowing at nothing and they're at 1%, let's say, and they're lending it at 5%, they're able to make a 4% spread on that, which then they're able to make money doing that along with origination fees and everything else. However, when it comes to hard money, that money is all private capital. So that money's coming from private individuals. Occasionally it'll come from different types of banks, and those banks are charging much higher interest rates. And that's because of risk. Anytime you're lending on a property as to what it's going to become rather than what it currently is, there's a whole lot more risk because effort needs to go into that property. For example, when the bank is giving a loan on a house that a homeowner is going to move into, they're able to say this home is worth this right now. Whereas a hard money lender is going to say this home is going to be worth that once a whole bunch of work and effort goes into that property. So there's a lot more risk from somebody that's giving that hard money loan. In addition to that, you're dealing with market variations or things that could be happening. And when you're getting a hard money loan, you're not income qualifying, meaning you're not getting a loan based upon your job history or your propensity to repay. So when you're getting a loan on your personal house, they're looking at your income, they're looking at your credit, they're looking at your ability to repay, they're looking at all those things, and they're taking that all into consideration before they actually give you a loan. They call that ratios. Well, on a hard money loan, you're not dealing with that. You're getting a loan simply because of the asset, which is why it's called hard money. Hard isn't because it's hard to get, it's actually easy to get, but it's hard because it's lending on the hard asset. It's lending on the hard asset, not the soft assets. Soft assets are your credit, your income, your job history, your experience. Those types of things are soft assets. The hard asset is what you're lending on itself. So for example, the property itself. But then when you're dealing with a hard money loan that's going to be fix and flipped, that property's not worth what's being lent on the property the way it sits today. It's going to be worth that once the work is done. So there's quite a bit of additional risk on that. Interest rates, you're typically going to be 12 to 18% depending upon your experience, depending upon your money down or lack thereof, depending upon any of your experience as an agent or as a general contractor. It's also going to have to do with your experience as to how many fix and flips you've actually done. So the great thing about hard money that makes it a really good choice when you're investing is it's easy to get. You can get it really quick. It's based upon the property, not based upon the individual, but that's one of the reasons why interest rates are so high when you're dealing with hard money. Hope this is helpful. Check us out at DoHardMoney.com and make it a very profitable day.